Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon. Thanks for coming on today.
Happy to be here.
Well, the minutes from last month's meeting, as you just heard, at the Federal Reserve show officials doubting that inflation's easing, and they're prepared to keep raising rates. So it's not clear, as some of the market expect, that they're going to pull back from their recent aggressive moves. What do you make of the latest minutes from the Fed?
Okay, well, the minutes do show that the Fed is more hawkish than perhaps the market expected. The meeting for the FOMC did take place before the consumer price index numbers for July was announced, but they probably had some indications of how it would go. And the July numbers did show that inflation may have peaked in the United States, but while the oil prices have gone down, food prices have gone up, and the prices for manufactured goods and especially for services were rising. That's partially because services are making a comeback after the coronavirus epidemic has been gone down a bit, and also because for the manufacturing, the higher oil prices earlier in the year is now beginning to affect the cost of production. So there is some fear by the FOMC that the high inflation will continue in the future, even if oil prices do continue to fall. But participants in the FOMC meeting did note that the recent readings on inflation expectations were consistent with the long-run expectations anchored around 2%, which is the Fed's goal. And the participants did agree that there is little evidence that inflation pressures were subsiding, and it would take a considerable time for the situation to be resolved. And the participants emphasized that the slowdown in demand would play an important role in reducing inflation. So the market seems to be reconsidering how much the Fed will increase the rate when they meet again in September. Even with this new information, right now the betting seems to be that the Fed will raise the rates by 50 basis points rather than 75. So it's about 60% of the analysts surveyed said that they expect the interest rate increase to be 50 basis points, but raising it by 75 basis points is still within the possibility. And I think the market consensus has shifted somewhat toward the Fed raising the rates by 75 basis points because of what the minutes said. Now, the indication seems to be that right now the Fed has raised the interest rate to at or near what the Fed considers a neutral interest rate of 2.25 to 2.5%. But it'll probably rise higher than that, and it'll remain on that higher level for an extended period of time. But again, the hope is that the Fed will proceed on a slower interest rate increases because hopefully inflation has peaked.
Well, it does seem like the September meeting will be a crucial one. Now, Professor, stocks overnight on Wall Street closed lower as investors tempered their hopes about the Fed maybe backing off on interest rates. The Dow off by 0.5%, S&P about 0.7%, and the Nasdaq 1.25%. That ends a 5-day winning streak for the Dow. What's the story in the global markets?
Okay, all the markets so far seems to be affected by what the minutes said. All the markets yesterday did show a decline, but there is some indication that perhaps consumer demand has been starting to weaken. Some interesting numbers coming out from the second quarter earnings numbers and earnings projections. There's signs of consumer demand readjusting and perhaps peaking, though it's not necessarily falling right now. The earnings report by Walmart and Target, two U.S. retail companies, make interesting comparisons. Walmart sells food and groceries, and it's recorded a very strong increase in demand, while Target, which sells home goods, their earnings and revenues seem to be falling. So that's taken as an indication that the consumers are shifting. They're buying less discretionary goods, and they're concentrating more on necessities. Because overall consumption does not seem to be falling, we seem to be headed toward a soft landing like the Fed wanted to. But problem is inflation is still at a very high level. So the question is what would happen if the Fed raises interest rates additionally. Now, the U.S. still has a very strong labor market, so there's a big question on whether the U.S. is in a recession, even though, at least on record, the GDP has gone down for 2 consecutive quarters. But right now, they seem to be headed more toward soft landing than a hard landing. Year to date, Dow is down 7.1%, S&P is down 10.9%, Nasdaq is down 18.3%. European markets yesterday followed U.S. markets downward, but today German DAX and French CAC has been rising. The FTSE has been falling because of the, as said in the last story, UK had historically high inflation rate over 10%. Germany is trying to shift energy supply from Russia to elsewhere. The gas exports for Normandy Norway has gone up tremendously, and Germany has decided to retain 3 nuclear plants, which are expected to go offline. So this winter, they may not need as much Russian fuel, and that may add to German economy as the year goes on. Asia, Nikkei, Hang Seng, and Shanghai were all down today, somewhere between 0.5 to 1%. China does seem to be facing an economic slowdown. Housing prices and constructions are down. Demand and industrial productions were up, but less than expected. China, the cities are right now vulnerable to lockdown because of the coronavirus, but in addition, factories are also closing because of overheating, so their economy will not likely to be active until at least the summer is over.
Well, now the Kospi today here in Korea also seemed to take its cue from Wall Street, at one point falling through 2,500 points. In the end, only a modest decline, though. Foreign investors continuing to buy, a bounce back for Samsung shares. Tell us about the domestic market.
Okay, one reason the Kospi did not do as badly as what some analysts expected was that the profit reports on listed firms came out from the Korea Exchange for the first half of the year, and it recorded record revenues and operating profits. The operating revenues for the listed firms in the Kospi were up 25%. Operating profits were up 17%. And more specifically, for the services firms, they were up 48%. More specifically, transportation equipment was up 86% in terms of operating profits. Distribution industries by 46%. Warehousing industries firms were up whopping 178%. Now, these numbers are partially because of distancing measures being over, but also last year when Korea was still in a pandemic recession, the numbers were so low to begin with. Also, inflation is likely to have driven up some of these revenues, so it's not entirely clear whether this good news will continue in the second half of the year. Kospi was down today by 0.33%, ended at 2,508.05. Kosdaq was down 0.16%, ended today at 826.06. And year-to-date, Kospi is down 16.1%. Kosdaq is down by 20.4%.
Got it. All right, Professor, we'll have to leave it there for today. Thank you, as always, for coming in on the program. We appreciate your insights.
Thank you.